We're live.
Oh.
What's up, everyone? I'm Nick Campo. That's Ben Singleton. We're NBI Financial Group. This is the Lone Guys Podcast.
That's right.
Episode 2, Educating the Masses, and I have some major beef today. We could get into that in a second. First, Ben, how are you, and where do they find your personal on social media?
I'm doing great, Yeah, you can follow me on social media, Ben Singleton on Facebook and LinkedIn, and it is Ben .NBI Financial Group
underscore NBI Financial Group
on Instagram.
Yeah, on Instagram. You got to start getting that a little bit better. It's fine. No, we
I haven't pushed that one yet.
But we put out a ton of information on our Instagrams are hooked up to our Facebook. You can find me. I'm Nicholas Campo. I'm on LinkedIn. I'm on Facebook. I have a Twitter. And I'm Nick underscore NBI Financial Group.
What's your Twitter handle?
My Twitter handle. I don't have a personal Twitter.
Oh.
Yeah.
You said you had Twitter.
We have a business Twitter.
Oh, okay.
We're about to launch a business TikTok too.
Okay.
So yeah,
that'll be fun.
Yeah, it's been a busy time. We became mortgage brokers. First off, Ben, how's your week been?
It's been great. A little crazy. Ever since the inflation report came out on Friday.
8.6%.
That's right.
Year over year rolling average.
Yep.
How do you feel about that?
Basically, what that showed is that the Fed's interest rates hike before really did not do much to the inflation. So that's a little nerve-wracking for people following the markets. And, I mean, if you were following any sort of market, stock market, crypto, rate,
For my
market.
mortgage people out there, and I think you might agree with this, normally when the stock market is tanking,
yeah,
interest rates go lower.
Correct.
Like, this is not normal. It's not a normal time. It's a weird time for us to be mortgage brokers, striking out on our own as we have, recently.
Yep.
What is your mindset as we're attacking this market? We have a unique situation in our setup. Maybe you should be asking me what my mindset is as I'm going, I'm going out really pushing the business. You're talking to realtors as well. But what is your mindset when you're looking at a market like this?
Oh, and the market as a whole? I'm still not pessimistic. I still think how big of a increase in rates that happened, looking at the stock market drops too, it's all because of the same thing, is just because of the common consensus that is overreacting.
Yes. Emotional.
Exactly. Everyone sees
Speculative.
it. Correct. And granted, look, the inflation reports, I thought it would be better. I thought the higher rates would have dropped that down a little bit. The fact that it had not showed that that's not happening at least as quickly.
Have you dug into the numbers
as
at all?
Everyone thought.
So, the CPI is different metrics that makes up the CPI for the inflation. So, a year ago, and I've been screaming about this, a year ago, it's a supply chain issue. It was a supply chain issue. Our supply has caught back up.
Yep.
And now it's an energy crisis. Our energy levels,
yes.
Have you seen the price of gas and diesel?
Yes. Filled my car up today.
So you could some people call it a Putin price hike. Some people blame Joe Biden. Some people, they blame, policy. I'm going to tell you this. I don't know who to blame. I don't care about blame. All I know is energy prices are too high, and we have to do something differently. How do you fix it? Because we went from a supply chain crisis that was pushing all these prices up because we shut the economy down for 2 years. Now we're in an energy crisis, right? And now our energy prices are too high. So what it cost, like that coat, for example, probably cost you 15% more than you would have paid for it 2 years ago. And part of the reason it's costing more now is why? Because it costs so much to transport it. 90% of everything you see was on a tractor trailer.
That's right.
Or transportation. And it's just wild. So prices are up. Here's the other piece. In our market, real estate mortgage prices, mortgage amounts are getting bigger because real estate prices have gone up because the price of everything else has gone up. Plus there's a supply issue in the real estate market. 2017, there was, I think, 3 million less families.
Yes.
And more supply on the market. There's less supply now and 3 million more families. Baby boomers aren't moving. Millennials and Gen Z are coming into the market. They're the two, if you combine millennials, Gen Z, and baby boomers, they're the two biggest market. Supply and demand. It's pushing prices up.
Absolutely.
Supply is super short. So I just, now getting back to that inflation piece, 8.6, that's unacceptable.
Yeah.
Your thoughts? Do you think it's okay or?
Oh no, I think that is absolutely unacceptable.
How do you fix it? I don't know. I
There's
personally,
not an easy way to fix it.
no.
There's not. I mean, they're trying to by hiking the rates up, and I mean,
The rates don't fix the energy problem, which is the cause of the inflation right now.
it masks, but it does kind of mask the
It stops people from spending.
correct.
So if people are spending, prices are going to be higher.
It doesn't cure it, but it stops the bleeding. If that makes, or slows the bleeding down, I should say.
Hey, y'all. Thanks for watching this clip. Go ahead and bang that red subscribe button.
And turn on notifications by ringing that bell so that you can keep up with all of our mortgage and real estate content.
Now back to our regularly scheduled program. They're talking about another 1.75% by the end of the year in raising interest rates. And I was just reading a report that they expect the rates to go even higher through 2023. And then they're going to ease it in 2024 and need to give the economy a shot in the arm again.
Yeah, I mean, there's a lot of other factors in that, especially the whole Ukraine thing. If seeing how all that goes, because you're right. I mean, energy has a big part of that.
I don't even know if it's as much the Ukraine thing as it is what happens in the November elections. If you get a different color and maybe they open up some of the, maybe they allow leasing and drilling and all that here in the United States, and that can lower cost. But
Yeah,
I'm not
it
an
could.
energy expert, and I don't know. So this isn't a political statement, and all you nut jobs will take it as political. I'm just saying, like, something needs to change. What we're doing right now is not working. The prices are getting higher and higher. We have the biggest thing, I actually think it started 30 years ago when we started offshoring all our companies. We need to onshore these companies again and start making stuff here. But here's the thing. We have a worker shortage.
Yeah,
So what are we doing? It's 12 of half a dozen here, half a dozen there. We're no matter what. Sorry for my language, Zach. Beep that out,
this
right?
is a family show.
Yeah, 18 and over. Yeah, 18 and over. But you get what I'm saying? And listen, my mindset, I truly don't believe that. I believe in abundance. I believe there's a ton of abundance. I believe that we are seeing some very good things in the work for workers right now.
Yep.
And so 40% of all people who own a home right now own it debt-free, meaning they've paid their mortgage off. That's the highest number in, like, pretty much history.
Oh,
Right.
it is. Right. People have more equity right now than ever before.
Ever. And I think that's great.
Ever. What was it? The average homeowner has, what, 170,000 in equity?
Yeah.
Average? Like, that is crazy.
Part of that's because the price is skyrocketed.
Absolutely, it is. But, and that goes back into the current state of the market. We've been talking about rates. We've been talking about all that. But you look at it, how stable do you think the housing market is?
Me, personally,
Yes.
I think it's very stable.
Yeah.
I just, it's not 2008.
Correct.
And we say this over and over. And recession, so in 2008, they kind of gave recession a bad name.
Yes.
I mean, no one likes a recession, but that doesn't mean the economy's flipping backwards. Like 2008 was a depression.
Yes.
And they stopped a deep depression with some of the stuff, like bailing out the banks and doing everything that they did. They stopped a very deep depression, right?
Yes.
They stopped 1930s and 40s from happening again, right? The Great Depression.
Yeah.
But that was probably a depression, right?
As close to one as we've had in a very long time.
It didn't
I don't know the dynamics of what it exactly considers it, but it was, yeah.
It didn't bounce back either. Like, it's not like it just came right back a couple years later. A recession is normally 2-year cycles, right? Like every couple of years. So like 18 to 24 months, you slow the economy, and then you get
Correct.
a shot in the arm, and it starts growing again.
Yep.
It's basically a controlled growth.
Yeah.
Recession means a slowing of the economy. It doesn't mean a shrinking of the economy.
Correct.
2008 was a shrinking of the economy.
Correct. Now, as always, a lot of things are going to be regionally based. It's going to be different depending on where you live. It's going to be industry based because you are going to have certain industries that may actually regress. You talked about energy
Yeah.
earlier. That's struggling. You talk about student loans. That probably is a bubble.
Student loans is a bubble.
Absolutely.
Let's just get it out there. The student loan situation is not good. It's predatory lending by the U.S. government.
Yes.
It is what mortgage lending was before all the
Yes.
regulations came in 2009, 2010.
And we see all the time clients coming in hundreds of thousands of dollars in student loan debt.
Hundreds of thousands.
They're deferred, meaning they're not making payments on it, still collecting some interest, just sitting there, but they're not going away.
Nope.
Something's got to give.
I thought Biden was supposed to forgive all the student loan debt.
Good luck doing that.
I didn't pay mine. I'm just kidding. I paid mine in full. I don't have consumer debt because I don't believe in it. I got a little bit of Dave Ramsey in me, but I do believe in mortgage debt. I'm a little bit different than him there. But what I'm getting at is we're in an industry where everybody, dude, we post stories on our Facebook. We do that type of thing. People are reaching out to me. Interest rates are rising. The sky is falling. And I finally responded to several people today. I'm like, listen, I'm not a doom and gloom guy. Even in 2008, $4 billion with a B, billion dollars of mortgages were created.
Yes.
Or home sales. Some of it was cash. So it was 3-point-something billion with a B mortgages were created. I have to believe I can get a little piece of that pie and help people.
Yeah.
Right?
Absolutely.
So from a mortgage originator standpoint, who's going out hitting the streets talking to realtors, the realtors are like, oh, it's slowing down. It's slowing down. And we see headlines all the time, and this is, my pet peeve.
Yeah.
I battle back against that. Oh, well, what are you telling your client? Because here at NBI Financial Group, the loan guys, that's us. I don't look at a single client as you're a transaction and I have to get this transaction and move on to the next. I'm looking at every single client as what, Ben?
A client for life.
A client for life. I'm marrying my client, so I'm looking at my client like this. Hey, Joe, homeowner.
Liz isn't happy with you.
It's not literally marrying. It's a figurative thing. Don't get excited. But the thing is this, is when I look at them from that standpoint, right, of we are going to work together till I die or you die. Whatever happens first. We're life partners now because I helped you with a mortgage. I'm creating a comprehensive real estate plan with you, and here's the deal. Here's what I'm doing for them. I'm telling them, if you don't buy a house right now, in 2 years, and we're in the Carolinas, and like you said, if something does hit, it could be regional, but I'm pretty sure that we might be somewhat insulated here.
Yeah.
We are growing exponentially. There's not enough homes. So what I am telling my client is, if you wait 2 years, you are going to be paying more for a home. You are going to lose buying power. And you heard me on the phone. What was the conversation like with that client of mine today?
What, on the buying power?
Yeah.
Yeah.
They didn't like to hear it.
No, that was a very interesting conversation.
It was.
But it was good.
I'm not going to truth might if you're the buyer,
yes, you
might not want to hear what I'm telling you. I have a fiduciary responsibility to you as the client to give you the actual factual information and not just what you turn on Fox News. And that's the hardest part about the Carolinas is there's a lot of people who watch Fox News, and that's okay.
Yeah.
I'm not bashing you, but it's not all terrible. Because the administration right now doesn't agree with that viewpoint, just like the previous administration wasn't the CNN viewpoint. So everything on that channel is negative, 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 and everything on Fox News is negative, negative, negative. The world is burning. But if you step outside and talk to your neighbors, it's not as bad as the TV's telling you.
Yes.
You get what I'm saying?
Yes.
Hey, y'all. Thanks for watching this clip. Go ahead and bang that red subscribe button.
And turn on notifications by ringing that bell so that you can keep up with all of our mortgage and real estate content.
Now back to our regularly scheduled program. So,
let me ask you.
Yeah.
Going back to that conversation today.
Mm-hmm.
What do you see? The Fed's raising interest rates, but like you said, that by itself will not solve it. Yeah. But where do you think inflation will still continue?
Yes.
Or where do you see that going over the next 2 to 3 years?
Rolling average, right?
Yes.
So the rolling average of inflation is going to say it has not hit its peak yet.
Yes.
We shut the economy down in 50% of our states for 2 years. That's going to cause issues. There's not a soft landing to that. You understand?
Yeah.
So there's going to be some bumps and bruises. But what I tell every person is, listen, you're a hardworking American. Work hard. You're going to be okay.
Yeah.
It's going to suck for a couple years. It's not going to be easy. Your savings might dwindle. You need to budget. You need to look into things. If you have high interest rate debts, you need to get those taken care of.
Yeah.
Whether you go on a Dave Ramsey plan or talk to somebody about debt consolidation, you need to get them taken care of sooner than later. But don't be afraid of a mortgage, because even at 6.5%, that's historically low. But this is what you see.
And half the interest rate of a credit card.
So 100%. And let me say something else here to answer your question. Where do I see it going? I see it peaking in October.
Okay.
Because it's a rolling average. So October, November, it's going to peak. So at the end of this year, right? I see it starting to come, the rates start coming down a little bit and inflation start coming down in December. And here's the deal. And I want everybody to understand this. It doesn't matter who is in office. It doesn't matter who the administration is. They're going to celebrate it as a win for them. And it's not. It's just what it is. It's numbers, right?
Yes.
So the energy piece is going to have to get figured out. And as much as I love new technology and clean energy, Tesla's a dream car of mine. Like when I make it, I have a sweet ass diesel engine pickup, 2500 series, probably the GMC AT4. I already got that picked out.
Yeah.
I'm going to have a sweet ass muscle car, but the car I drive to the office every day is going to be that Tesla, the Plaid. Oh, dude, those things are sweet. We aren't at the point where we can fuel America on battery-powered engines, on solar power. We don't have the technology yet.
You mean everyone can't buy a $70,000 car?
No.
Oh.
No, they can't. And listen, they're great vehicles.
Oh, absolutely.
But if you want to talk about energy efficiency and harm to the ecosystem, which I do believe we have caused harm with fossil fuels and litter and plastics. There's a giant island floating in the Pacific Ocean.
Yeah.
See, I'm a weirdo, right? I have beliefs from both political parties, so I just don't fit in. So I do believe that we need to take care of the planet. That's what Earth Day was about when we were kids. Remember Earth Day?
Do they still have Earth Day?
Dude, I remember they used to bring these little robots into my elementary school, and they would pick up trash and stuff. Like they rolled on like the wheels and stuff. I thought that thing was cool. But I believe in recycling. I believe in taking care of the planet. I don't believe in plastic. Hemp plastic I believe in because it's biodegradable. We don't have to go there though. It's a byproduct of marijuana, so it's illegal. But what I'm saying is, and what I'm getting at is, yes, inflation is going to continue to go up because it's a rolling average. So we're still taking some of the low inflation numbers into account. Real inflation is probably like 13%, right?
Yeah.
If you don't use a rolling average and we're just looking at year over year without the rolling average, like it's probably 13 to 15%. Do I think it's going to get to 13 to 15%? I hope not. I think it's going to get close to damn 10 though.
Yeah.
Right. But with that rolling average, once you take July of last year, August, September, October out, and you put those new higher numbers in there, it has it's not going down.
Yeah.
It's not going down. It really started getting bad probably in January, right? So we got to see what
maybe February.
So January, February, if this coming year's January and February 2023 are lower, then you'll start to see the inflation go down, and then the Fed's going to be the hero and so on and so forth. But are they?
Because I still got a sub-3 rate in January on my mortgage.
Oh yeah, I wasn't sub-3, but I was close. You have a better credit score than me though, so that's the thing. But yeah, so to answer your question, man, if we have not peaked on inflation. We have not peaked on the interest rates going up. We have not. They're going to keep going. Now ask me the next question. Should I buy a house? Would I buy a house?
Yes, would you?
Absolutely. I'm buying an investment property as soon as I can. I already have a primary, so the next thing is I want to create wealth for my family through real estate, comprehensive real estate plan. I have one.
Yes.
Would you buy a house?
Oh, absolutely.
Why?
All right, so this is going to be a little bit of a long ordeal, but here are my thoughts on it. Inflation, yes. Right now, I believe that the real estate market is as stable and strong as any market out there, because I believe it actually is naturally inflated as well. We bring up that there's a housing shortage.
What do you mean naturally inflated?
It all comes back to supply and demand.
Gotcha. Okay.
Right?
Yep.
people, I mean, housing is a necessity.
Yes.
You have to have shelter and food and water.
You don't really need food, do you?
Mm.
I need to start fasting. We got some friends who are calling me out for my chunkiness.
Yeah, well, yeah, me too. But anyways, shelter is a necessity. Everyone has to have housing, right? So the demand is always going to be there. There's a supply issue right now. There are not enough houses being built. Right now, the vacancy factor is at an all-time low. It's around 4%. You compare this to 2008, which a lot of people are, because speculation is going crazy right now. It was over 12%, which is extremely high. What does that mean? There's not enough houses out there. You look at rent prices. Rent prices are sky high. Why? Because of the same thing, supply and demand.
Yeah.
So you take that into account. Yes, real estate prices should be high right now.
Mm-hmm.
And I would say building materials is one of the one things that the supply chain hasn't fully caught up on yet.
Right.
You still go to a builder and say, hey, how long is it going to take to build? They're going to tell you 7 to 12 months to build a house.
Yeah.
That's crazy. That's not going to be fixed overnight. Prices are, because of that, are going to stay up.
How long does it take to fix that? Because we need to build more houses. We don't have enough houses for the people in America.
Yeah.
We no. Definitely don't. Like, if you go on the NBI Financial Group LinkedIn page, go back a couple days ago, maybe a week ago, I posted a whole thing about how we don't have enough houses on the market for the families in America. We don't have enough houses in general.
Correct.
It's wild.
It's mind blowing. I mean, because you feel like there's builders everywhere. Everyone knows at least a few contractors, right?
Right. But they aren't building houses.
Yes.
That's the problem. None of them are building houses. Down south, you see these neighborhoods flying up, right?
Yes.
Like, I forget what the name of some of the big builders are, but they're flattening all this land, they're taking out all the trees, and they're putting all these houses up.
Half the houses over the last few months, half the houses in the country were built in the Southeast.
50%. But
correct.
Because of what? Forest fires out west burned up a lot of the wood supply.
That is true. And Canada.
Yes. Yeah. So, huge issue.
Correct.
It's going to take at least 18 months to solve that, or longer, or what?
Probably
need the baby
2 to 3
boomers
years.
to die?
Probably
baby boomers have to die, right?
Probably 2 to 3 years before supply
Don't
starts.
kill
spinning
the
up.
baby boomers. We're just saying.
But what does that mean? That means prices are going to stay naturally inflated because of a low supply, right? At least for the next 2 to 3 years.
Yeah.
Any sort of recession that we're getting into, and again, a recession is not a depression, not saying doom and gloom, but any sort of slowdown, the housing values will be protected.
Right.
I truly believe that.
For how long?
For at least 2 to 3 years.
Okay.
And by that point, the economy will be moving again. And this is okay. Nothing to necessarily back this up.
This isn't financial advice. This podcast is meant
Correct.
for entertainment purposes only.
Correct.
And we do a lot of stuff when it comes to reading MBS, and it comes to bond markets, and it comes to interest rates and following that. We do a lot more than what a lot of people.
Absolutely. And my speculation is that the Fed is going to go back to quantitative easing after that. In terms of
they've already announced that.
Did they announce it?
Mortgage News Daily, my man. So Mortgage News Daily has an article. Powell says that. So they're going to do another 50. Okay, so this is MBS Live recap. Big victory after Powell says toss up between 50 and 75 basis point hike again next meeting. Whether we're talking about the past week, month, or year, the war continues going poorly for mortgage rates, but today's battle went quite well after Powell's cavalry rode into a rescue. In reality, there was one simple line when he said the next meeting would involve a discussion between 50 and 75 bip rate hikes that caused the bond market to turn on a dime. Why? Do you know why?
No.
Because it was already priced in, and the markets want them to rip the Band-Aid off. The markets,
speculation.
Speculation is killing the market. 50 to 75, that means if they're going up 150 more basis points this year, as far as that's concerned, you're halfway there.
Yes. You know what was interesting?
What's that?
So today, after that Fed meeting was
Uh-huh.
announced, the 0.75 of a point hike in interest rates.
Yeah.
What did mortgage rates do? What did the stock market do?
Well, here's the next article. Mortgage rate dropped sharply after Fed announcement. Stock market goes up.
Correct.
Here, which is wild. Stock market goes up and rates go down. That's weird. This is really weird. But so, and for those of you who don't know what I'm reading, it's Mortgage News Daily. You can subscribe. They'll send you emails. But here's the thing: is like the drama began last Friday. Consumer Price Index, the key inflation report. Bonds overnight on Friday, which they won't release this report until this coming tomorrow. Bonds overnight went no bid, which has only happened 5 times in the history of the bond market. No bid. And then people were putting bids in, basically saying, you have to pay us for us to take these. But what the thing is they're trying to clean up their books. They're trying to fix the mess that was created when they did everything they did in 2008 to save everybody.
Yes.
But they're trying to do it with the least amount of pain as possible. And the markets want you just to rip the Band-Aid off so we can start moving forward.
Yes. So just so everyone's aware what we're talking about in terms of that. So the quantitative easing. So after 2008, in order to help stimulate the housing economy, what the Fed did is they announced that they were going to start with U.S. dollars, start buying in bulk bonds. Bonds are what back the mortgage industry, right? So when you buy a bunch of those, there's increased demand, which drops the rates.
Mm-hmm.
Lower rates mean more people are going to buy,
Right.
Lower payments. Stimulates the housing economy. They have been doing that until now. And that is what they are doing. That is what they're stopping to increase the rates again, is they are controlling that. They are basically artificially controlling the market by doing that.
So it's not really a free market.
Correct. Like, everyone's saying, 6.5% interest rates. That's insane.
It's not.
No, that's actually probably where we should be.
Yeah. So what did Powell say? It was actually quite simple. Powell does not expect a 75 basis point rate hikes to be common, and that the next meeting would involve a decision between that and 50 basis points. For a market that was quote-unquote sure we'd be seeing 2 consecutive 75 basis point hikes, this was worth a reprieve from the recent stress. Importantly, by hiking 75 bips at this meeting and by leaving it on the table for the next meeting, Powell also showed the market he's serious about righting the Fed's wrongs on the inflation front. The wrongs being that the Fed let the policy run too hot for too long and underappreciated the tenacity of the current inflation regime.
Yeah.
So the bond market rejoiced with the bonds that specifically underlie mortgage rates improving enough for the average lender to drop rates at least a quarter point. Some lenders drop rates by more than that, depending on the starting point. By that, I mean that the drop in rates depends on the actual level of yesterday's rate quote. It was 6.75%, for example. Some lenders dropped all the way to 6.25, which I was seeing 6.25-ish on a new construction, ground-up construction, one-time fund.
Yeah.
Conventional loan. But yeah, so yeah, still phenomenal, but not 2 times phenomenal. Let's see. Yeah. So anyways, I'm trying to find, there's a quote in there in one of these articles I was reading. And I'm going to find it. Go with your thought and I'll find the quote.
I was just saying, and back to where I said earlier about that they improved, is because speculation was getting so out of hand.
Yes.
Right. But why is that? It's because a few members of the Fed are kind of letting slip a few days before kind of where they see things going. This happened the last meeting too, 6 weeks ago.
It happens every time.
And so there is a balance before, because everyone's expecting it, and then they're kind of letting it slip and then go not nearly as extreme.
Yeah.
And so it's been several times in a row now. I mean, what are your thoughts on that?
About letting it slip?
No, about doing that to, yeah.
My thoughts are this: it would hurt the market more if they didn't slip what was going on,
Because it'd be more of a shock.
It would be a
Not
big time shock.
A shock and then a correction.
Correct. So I call that knee jerk. What happened today was a knee jerk reaction.
Yep.
Right. So everybody's freaking out. It's like, man, I got to go to the doctor. I got to go to the doctor. I got to go to the doctor. And you're all nervous about going to the doctor. And you go to the doctor and it's not that bad.
Yep.
We're going to be okay. Like,
Absolutely.
we're going to be okay. Like, we're going to thrive. And in 2 years, when the rates come back down, we're going to really thrive because everybody that we put into a home right now, we're going to refi into a lower rate so they have a lower payment, and it's going to boost the economy. They're using the housing market to boost the economy, right?
Yes.
They're using the housing market to slow the economy because if interest rates are higher and you buy a home, your payments are going to be higher. So the difference in 2 percentage points is like $400 in payments, right? That's $400 less that you can save, $400 less that you can go out and spend. So that's what they're thinking because they want us to slow spending down so the economy stops growing because if there's less demand, prices drop.
Yes.
So we're going to be okay.
Oh, absolutely.
But people don't like having to pay more for anything.
Yeah.
Right? Like, I'm pissed. I fill up my car and it's $50. It was $26 before.
Yeah.
You know what I'm saying? That pisses me off. But at the same time, we really do need to stop inflation because I don't want to pay $1 million for my home in 5 years.
No.
You know what I mean? Like,
Absolutely.
because wages aren't rising as fast as the housing price is going up.
And then you bring in the whole question of what is that doing to the dollar?
Well, I can tell you this. If you keep printing the dollar, that shit ain't going to be worth nothing. That's why I have the Bitcoins. I have the XRPs. I have a whole, again, not financial advice, but I personally have a whole variety of different cryptocurrencies. And they have to, listen, I read the white pages. I'm a nerd when it comes to that stuff. But the reason for that is because I don't know how much I trust the dollar. So if you really want to get into it, the petrodollar, it's oil backed. This whole like thing with Russia and Ukraine and China and this person and that person, it's all about money at the end of the day.
Yep.
For everybody. So money, control, and power, right? I worry that we're going to keep printing money and sending $40 billion overseas to fight in these wars and to do this and to do that because every time we print a dollar, it's causing more inflation. Every time we hand out money, it causes more inflation. Every time we print a dollar, it weakens the value of the dollar.
Yes.
I like being the superpower, number one. I love America, right? I really do. You know that. I'm a very prideful American. I want us to stop printing the dollar so that the dollar stays strong because I like being the best.
Yeah.
And I'm going to call out some Americans here. Hey, Americans, we want to be the best. So let's onshore our companies, start making things American made again, and be the best, right? Like, we have the best housing market. We have the best land rights. We have the best mortgage industry. We have the best stock market. You don't see us going to invest in Brazil, but Brazil's investing in us.
Yeah.
You don't see us going to invest in somebody, and I mean in stock market wise. You know what I'm saying? Like, we're the best country in the world for a reason. Let's not forget that. So, yeah, I think if we keep printing the dollar, we're SOL. We're shit out of luck. So, I mean, that's my you got to stop printing the dollar. Stop printing it. Stop giving it away. Start getting our debt down.
Yep.
As a country. So, yeah, that's my thoughts on that. I mean, that's, again, that just economics 101. The more supply of something, the less it's worth.
Yeah. I feel like we complicate things a lot more than it should be.
It's pretty simple.
When you're talking about business, yep, supply and demand. Like
Yeah.
That cannot be said enough. It drives everything.
Absolutely. You're 100% right. I'm still trying to find this article, dude, because the Fed did say that they were going to go back to quantitative easing.
Yeah, that would be very interesting to hear that because that's huge for the future of
Okay. So
real estate.
Do you have any other thoughts on what happened today and this week or anything like that while I look for this?
I mean, not necessarily on this. I did want to kind of talk more about comparisons to 2008.
Yeah, talk about it. Let's hear it.
Yeah.
I'm all in. I'm there.
Yeah. So, little history lesson. So, 2008, everyone's comparing it now just because of really what the only thing in common is just the drastic increase in prices leading up to it. So, everyone's seeing this now with 2008 on their minds, thinking, oh no, here's another housing bubble. That could not be farther from the truth, in my opinion. Which I believe you share the same opinion.
Yeah, I don't think there's a housing bubble.
Yeah.
I don't think you can have a housing bubble with a vacancy rate of like 3%.
Exactly. In 2008, what led to that? You got to look at, first off, what caused the housing prices to increase. So you look at that and you say, people were buying houses just because they thought housing prices would continue to rise, not to rent them out, not to live in them. They just bought them to sit there and then sell them.
Yeah.
And they were buying them in subprime loans that they could not afford.
Which is the new FHA.
Yeah.
Well, but you can afford FHA.
Correct.
Yeah.
I mean, and there's all sorts of different requirements in there. In 2008, people were putting their mortgage in the name of a dog. Like, that's a true story.
Yeah. Yeah.
What's the name of that movie?
The Big Short.
Yes.
Awesome movie.
Great movie. I highly
Very
recommend
accurate.
watching. Yeah.
Very
highly
accurate.
recommend watching that. It is absolutely insane how, and when you do that, what's the chances of your dog paying back a mortgage?
They aren't.
Nothing.
Well, it's the same way, we talked about the conversation I was having with a client today, and he was getting frustrated with me, or she was getting frustrated with me, whoever, we aren't going to reveal gender, but they're getting frustrated with me, and I understand why they were getting frustrated. They wanted to go, and they wanted to buy land, but the interest rate on the land, on just the land loan, was extremely high.
Yes.
Why? Why is it extremely high on a land loan?
Smaller amount, higher risk.
Higher risk. Why is it higher risk? There's no house on it.
Well, you're not
Nobody's
living
living
on
in it. Yeah. It's just a piece of land, right?
Yeah.
Now
your,
you can't.
Your home's a necessity. A piece of land is not.
Now, if you go and get a construction loan,
Yes.
and you start building, yeah, you have to rent for a year while the build's happening, but you go get that construction loan, you start building, and guess what? All of a sudden, your interest rate is 6 points lower. Like, literally 6 points lower. For us, now, if you go to a credit union, it's probably 2 points.
Yeah.
But our lenders...
They have different revenues.
100%, but here's the deal.
It's a service to their clients.
So our lender who lends our just land loan, which is hard to find when it's just us, had no appetite for it because of everything that's going on.
Yes.
It's the same thing with down payment assistance programs. They're suspended.
Yeah.
They're suspended. There's no more down payment assistance as of right now.
On the inverse, too, you look at like HELOCs and second mortgages.
Yeah.
Before this, you would not find a lender that would do it. I asked about a HELOC myself. I worked for a lender. You know what they told me?
What?
Go to a credit union.
Really?
Yeah. Because no one wanted to do HELOCs.
But why?
It wasn't worth their time.
Why?
Because smaller loan amounts, not as much commission to them and payment.
Really?
Yeah.
Interesting.
It just wasn't worth their time.
It wasn't worth their time. They have no appetite for it, and that's what people don't understand. You have to have there has to be an appetite for this product because it's an investment on the secondary.
But you look at the market now, guess what we're seeing?
HELOCs.
Announcements.
Second liens.
we work with 15 or more than 15 now lenders.
Yeah.
Several of them are now coming out saying, get ready for HELOCs, get ready for HELOCs, get ready for second mortgages.
Okay.
They're
Great.
trying to flexibility because no one's going to refinance. So they're looking to get that equity out in other ways.
Right.
Because now they have to.
Right. Right. 100%.
Yeah.
And we're coming into a hard time. Funny story. On the way home from the office today, guess what happened to me?
What?
I got a phone call.
Yeah.
Guess what they wanted?
What?
Cash out. Guess why? They've owned their house for 3 years.
Debt consolidation?
It wasn't debt consolidation. People are starting to get nervous about the economy, and they want to take the cash out now and have it sit. So in case something happens, I'm like, that's not a good idea.
Yeah, I don't know about that.
Yeah, I was like, I would not do that. That just
not
increases.
Financial advice, our personal opinion.
Personal opinion, I would not do it, not financial advice. But if you ask me, I would tell you, hey, listen, that's probably not a good idea. But if you have high interest rates and stuff, let me. So I'm going to look at the credit profile and see, like, hey, what can I do for you? It was a realtor, too.
No. Now, debt consolidation, I think, is a great idea.
Because you lower your monthly obligations.
Exactly.
Yep.
And guess what's happening when you do that? You have more cash flow coming to you.
So let me ask you a question. If you're a good loan originator, do you allow someone just to take cash out and hang on to it?
I mean, I would give them my opinion that I don't believe is a great idea.
Well, no, you're advising them. You're a mortgage expert.
Absolutely.
So what would you advise them in that situation?
Not to just sit on a large amount of cash.
Do you know what I'm worried about?
What?
I'm worried about that it's going to get extremely tight for people who don't know the mortgage industry. Like you and I are going to be fine. We're working hard. Like we know the mortgage industry. We underwrote.
Yep.
There's a lot of people, and when I was on the lender side partnering with them, brand new loan officers
Yeah.
who just got into the industry who don't know how to survive in these markets. And they're going to say, oh, okay, yeah, I'll do that for you. And that they're going to put people in bad positions. Now, I don't think it's going to be enough to tank the economy, but I'm thinking that it's going to hurt people's lives. And part of what we do this for is because we want to help.
Absolutely.
So we're trying to educate through this. We're trying to educate through our social media. We're trying to educate.
Yeah.
We're not selling you.
No.
We're educating you. It's the same thing that I told the client today.
Yes.
I can get you a 12% interest rate on a land loan. And his head exploded. That's why he started getting mad at me. Why didn't you lead with that? Well, I led with the facts so you would understand that X amount of dollars you're going to lose, X amount of purchasing power, X amount of this because of X, Y, and Z reasons, because I needed to educate you first. If I just led with 12% interest rate, all this information that you now have to be able to make the best decision for your family, it still might not be the decision you made, but I did my job of educating you on it.
And what did you also tell him if he wanted to purchase the land?
I think you should go to a credit union to get a lower rate. Just like I'm going to probably tell this person who wants to take the cash out and let the money sit, I'm sorry, I'm not going to do that for you. You can make a stupid decision, but I'm not going to help you make the stupid decision. That's not my job. My job is my fiduciary responsibility is to the client and to put the client in a great position. Who would I be as a loan officer? And that's not making a decision for them. Now, but I have a hard time you can do whatever you want with your money.
Yeah.
It doesn't mean I have to participate. I'm not telling them not to make the decision. I'm telling them I don't feel comfortable making this decision. Now, if you want to have a HELOC on your property in case you run into something,
it's a great idea.
Let's do that.
Great idea.
Let's do that because you don't have to draw on that HELOC unless there's what? An emergency.
Absolutely.
So if that makes you feel more comfortable, then abso-freaking-lutely. I will do that 10 times out of 10 with you and tell you, do not draw on, we'll come up with a comprehensive real estate plan, do not draw on that HELOC unless of X, Y, and Z.
Yes.
If I look at the credit profile and there's car payments that are high interest, if there's this that's high interest, you know what I'm going to do?
What?
Let's cash out. That's consolidation. And then we can put 6 months of reserves in.
So, and just to explain a little more for the viewers too, in terms of why you're saying it's so bad to have cash on hand.
Let's use even numbers for this.
What? So we want to do a scenario?
Let's do a scenario. Let's use some even numbers.
Okay. So we were talking about it earlier in terms of, and that's why I asked him, do you think inflation is going to continue?
Yeah.
He said yes. What does that mean to your money sitting in a bank? Because guess what? When inflation goes up, price of everything goes up, right?
Found that article, by the way.
Okay, cool. We'll get to that in a minute. But the price of everything goes up except for what is sitting there in the bank. So basically, you are losing value.
Yeah, 100%. You're losing buying power is what you're losing.
Exactly.
So on 100,000, 10% is what? You lose $10,000 in
correct
buying power if the inflation is 10%. If it's 8.6%, you lose 8,600.
Correct.
Right? So that 100,000 the following year. So to give you an idea on that CPI number,
yep, that
year over year CPI of 8.6%, what that is saying is if you had $100,000 in the bank last year at the same time that the CPI number, that your 100,000, no, it's going down. CPI, inflation's up, right?
Yeah.
So when inflation's up, your cash on hand buys 8.6% less.
If it was invested, it would be 108.
If it was invested.
And yet the stuff in the bank would be still 100,000. So you would lose that $8,000.
So essentially, for what you could buy for 100,000 last year, you can only buy like what, 91,400 or
correct.
Yeah. So that's what people need to understand.
Correct.
Now, if you told me I want to take a cash out and put the $30,000 towards a down payment on an investment property, absolutely, let's do it.
Yeah.
Oh, your interest rate's a little bit higher, your payment's a little bit more, $300-400 more, but you're gonna hopefully make up for it on equity and investment over here, and in 18 months. In this article, actually, this is pretty good. Fed's Bullard, who's the head of the St. Louis Fed, says 2019 rates may be a future benchmark, says reports of softer growth in Beige Book, not a surprise. Fed's Bullard sees 3.5% rates setting up cuts in 2023 or 2024. So either probably end of 2023 or beginning of 2024, you're going to see rates come back down. So, yes, you will pay a higher amount for 12 months, and then I will call you and be like, hey, client, here's the deal. Rates are down. Let's refi.
Now. Yeah.
18 months. Who's been yelling 18 to 24 months forever? How do I know that? It's not a guarantee. We can't see the future. I mean, shit, man. A nuclear bomb could go off in the West Coast and change everything. You know what I'm saying? Like, and God forbid that happens. We don't want that to happen. But I'm going to keep living life. I'm going to keep working hard. I'm going to keep educating my clients on what it is we can and can't do, what it is they should and shouldn't do, and I am not going to do stupid with you, right? I'm not going to sell you a 12% land loan when I know you can go to your local credit union and close it in 45 days at 7%. That's not my job to give you a 12% rate. See, maybe I'm different than most originators, and maybe you tell me if I'm incorrect on this. Maybe I'm different than most originators because I don't believe that making money is more important than setting people up for their financial future. I actually believe that if I lead people in the right spots and put them in the right situation, I'll be considered an expert in the industry. My reputation will precede me, and I will make more money because of it. Is that weird? You know what I mean?
Yeah.
What are your thoughts on that? Should I turn them away if they still want to go with me?
No, I mean, should you turn them away? What do you mean? If they want to do something you don't recommend?
If they want to take a 12% interest rate on the land loan instead of the 7% at the credit union, when you know that you're going to provide the same thing.
Yeah, I mean, why would they not go with the credit union?
They like me. I know it's hard to believe, but just pretend. Because this is literally what happened.
Yeah, that's blowing my mind. People actually like you.
Yeah, weird. Surprised me too.
I mean, no. I mean, our job is to put them in the best situation.
So the interest rate, you would tell them to go to the credit union.
Absolutely.
The cash out situation, what would you do in that situation?
I mean, I definitely would recommend that.
I haven't looked at the credit profile, by the way, full disclosure. So there could be debts on there, we just haven't.
Debt consolidation, yes. I think the HELOC recommendation is a great idea because it gives them that emergency funds. And look, we say don't have cash on hand. That doesn't mean go paycheck to paycheck because you invest every single dollar.
6 months reserves.
Exactly. You need to have at least access to
6 months
rainy day funds, 6 months reserves at least. A HELOC,
6 months.
Yeah, a HELOC is a great option because it allows you quick access to that in case you actually need it.
Mm-hmm.
So I mean, I don't know. Did you bring up the HELOC?
I haven't looked at the credit profile yet.
Okay.
It was also on the way home, and it's been a wild week.
Gotcha. Yes, it has.
So I was just
markets
like,
have been absolutely crazy.
I was like, yeah, okay, I'm gonna send you an application. Let me know once it's done. And you know how it is: application, pull credit, take a look, have a conversation.
Yes.
Right. I didn't think of HELOC honestly until we were sitting right here. You started mentioning like second loans and HELOCs. I was like, huh. I was like, Spring EQ.
Absolutely.
Todd Highfield.
Yes.
Yeah, so I'm going to take a look at all the options, put them in the best situation. But my question to you wasn't as much about what you should do. Would you tell them, no, I will not do that for you if you knew it was going to hurt them? Like if I knew that they just wanted to take money out and sit it in the bank and they had their 6 months reserves, say they had no debt other than their mortgage, say they had not, would you still do it for them? It's a moral question, really.
I mean, but it also comes down to, do you absolutely know that that is a bad decision? Because things could crash. A nuclear bomb, like you said, could hit. Things could go bad, and then that money could actually be beneficial.
Really?
Yeah.
Could be.
Chances are pretty low, extremely low. I would not recommend that at all, and I would make that absolutely clear. But when it came down to it, I mean, it's their
choice.
Absolutely. Now, if for like the land situation, I would absolutely not make them go with or encourage them or allow them to go with me for a 5% interest rate hike to get the same thing elsewhere. I just would not allow
It's
that.
just an interesting moral dilemma for people in our situation, right?
Yeah.
Because our situation is this. If they want to do it, they have the right to do it. There's no law saying that we can't do that because we think one thing or we believe that it's bad for them or whatever. There's no law that says that. It has to be a benefit to the buyer, and there's a broad definition, or buyer, the client. It has to be a benefit to the client, benefit to the consumer. There's a broad definition of that.
Correct.
And with cash out to use those funds however you please, that's your equity. Do what you please with. I will do the loan for them because that's their equity and they have the choice. But I will also advise them that, listen, unless you're doing something with this money, this is a bad decision. I think that I don't remember off the top of my head, they might have mentioned investing. Okay, great idea. What are you investing in? I don't know. Like, right? It's not my business. My business is to make sure you're taking, like, that you're in the best position for a mortgage. You can tell me what you're investing in. I might think it's a good idea. I might think it's a bad idea, right?
Well, that's their decision.
It's their decision. And good. Like, you got the equity in your home. You were smart enough to buy a home 5 years ago.
Stocks were down. Maybe they're investing in a rental property.
That'd be great. Use me for that mortgage.
Yeah.
Like, I'll put you in the best deal. Period. So
Yeah.
that's just it's an interesting thing. Like, a good originator, a good good broker, because brokers are better, will advise you on. They'll come up with a plan, like what we did today, right? We came up with a plan. We showed them the numbers, and we let them make the decision.
Yes.
It looks like they're going to make the decision that is a good decision. So my decision, if I was in the same situation, would have been to do the construction loan and get the build started and try to knock it out, right?
Yes.
Their decision is to go with the land loan. And they're going to go with the credit union, which I think is smart. But also sent me a text saying, hey, when it's time for us to build a house,
Yeah.
we're coming back to you. Why?
Because you were honest with them.
Brutally so. To the point where you got up and walked down the hall to make sure everything was okay.
I did.
But he's a salt of the earth guy. The wife is a sweet lady. But there's certain people that they talk to you one way, you talk to them one way, and they respect that. Right? And it wasn't disrespectful on either side. It was a agree to disagree until they saw the picture the way I was painting it.
Yes.
Right? So, and I have text messages on my phone. They're super happy they crossed paths with me because I care. I'm passionate about what I do. I'm going to put you in a good position. I'm not just going to do whatever you say. I'm going to do what you say because it's your decision, but I'm going to lay out the facts and the data as I see it.
Yes.
And give you all the information because that's my job. And then if you still decide to make the other decision, good for you. And for all I know, because we didn't have documents yet, right? We were just kind of putting this thing together. That money that I'm seeing there that you put down for monthly pay, maybe it's not what you put on the application, right? So maybe that's why it's the best decision.
Yeah.
And normally we don't even have these conversations until we have all this stuff, all the pay stubs, all this, all that, and we tell them what they can qualify for.
Yes.
I got so how we ended up in this situation, and realtor partners out there, this is how we ended up in the situation. I got a signed contract. There was no pre-approval. They didn't come to me for a pre-approval. You know what I mean?
Yeah.
So if there's an ironclad pre-approval, we underwrite all our files prior to sending a pre-approval. We're not in this situation. You know what I mean? Because this conversation would have already been had. Like, hey, man, this is what's happening here.
Yep.
Here's what's happening with the markets. And also, this was about 3 to 4 weeks ago when this conversation took place originally, the original conversation, and there was no communication for like 2 weeks. And that's one of the things I said too. I was like, hey, man, I was trying to get a hold of you for 2 weeks. Rates have gone up. They aren't what I quoted you based off the information I told you. I can give you a rough estimate based off of what you're telling me. And if what you're telling me is accurate, here's what it would be: between 5 and 7%. The rate when we were quoting before all the other stuff came out was not 5 to 7%. It was a little bit, it was about 6.5%. But the land loan rate was what they were upset about because that went,
Yeah.
because of the risk.
Yeah.
So what are you going to do, man? What are you going to do? Somebody asks you, how do you keep making money as a mortgage broker in this environment? What do you say?
I mean, there's still plenty of, first off, real estate, like we said earlier, real estate is still pretty solid.
Yeah.
You even told me this the other day. How many houses were bought in 2008 in the middle of the crash
There was over $4 billion.
in volume?
Yeah.
4 billion.
I think 4 billion or 3 point something billion
in volume done in 2008 in the middle of a crash. This isn't even that. This is going into a possible recession with a strong housing market.
This is going into a possible recession that is going to, in 2023, rates are going to come back down. So every person you put into their home, you're going to refinance.
Absolutely.
So you're going to essentially double your production year over year.
Yes.
Crazy.
Yes. It's a short-term, high interest rates are a short-term problem.
Extremely short-term. I am so comfortable with that. It's crazy.
Yeah.
I don't think people are comfortable. I'm getting messages right now, dude, because of
they're not.
They are not comfortable with it.
I mean, and that's what I was talking about earlier in terms of speculation and comparing to 2008. And people are seeing this and panicking. They're not realizing how different it is, because the guidelines in loans right now are all good loans. And everyone's saying, oh, like you have all these riskier loans, like bank statement loans, 1099 loans. They're performing even better than normal conventional
Most
loans.
credit scores have to be like 680 on those.
Yeah.
So for you that don't know, who might just be watching this saying, oh, 680, that's terrible. 680 is a pretty strong credit score.
Correct. Conventional goes 620.
Yeah. And then
FHA goes 500.
With approved eligible.
Yes.
Yeah, I mean, bonkers. Is that the word for it?
I would say that.
Bonkers. This is a great industry. I love it.
Yes, it is great. But yeah.
But what? Don't leave me hanging here. That's very suspenseful.
That's what I was
My
going for.
question to you that you didn't answer was this. If you were going to give a young, in the industry less than 2 years, loan officer who got in while it was shooting fish in the barrel and they were making all this money, advice on how you make it in this industry during these time periods, what would you tell them?
How did I not answer that when you never asked it?
I said, what would you tell people in this industry to survive during these times? Same question, just worded differently.
Okay, fair enough. I mean, what, for loan officers? Or for clients?
Originators.
For realtors? Or originators?
People who do what we do.
Okay.
How would they survive right now? What should they do to survive right now?
I mean, right now you have a large diversity of products. You have HELOCs that are coming back around. You have ways to help your clients. And I would focus on that and focus on actually the client, not just a transaction. You're not going to go out there and get a bunch of easy refinances. It's not going to happen. But if you actually go out there, focus on the client, listen to their goals, work with them, find a great situation for them, people are still buying homes.
How do you get the client, though? Because a lot of them, year and a half in, they don't really have a lot of clients. They had people who that they saw on Facebook that came to them and refinanced. How do they get the client?
By working, by calling realtors, by calling attorneys, by networking.
Networking.
By showing everyone what you can do, what value you can provide.
I'm 100% on the same page with that. Because how many applications have we had in 2 weeks? I just looked.
I think we're at 15?
15. We just
14?
got
15?
17.
Oh.
We just got two more. Yeah. 2 more, and we didn't call anybody today because we were organizing.
Yes.
Right? 17 applications. And every one of them people over the next 3 months, probably 75 to 80% of them who send an application will get into a home and close within the next 90 days.
Yes.
We're building a pipeline every week because we call, how many realtors do we call?
400 to 500 a week.
So we're talking to that many realtors, telling them the value we provide. And our value might be a little bit different because we have underwriting backgrounds.
Absolutely.
We can do a little bit more. We pre-underwrite self-employed.
We're brokers with a ton of products. We're not retail bankers with the
100%. So when I was on the wholesale lending side, right, and I was an AE and we hit higher interest rate markets, you know what I wanted to be? An AE at a place that had more products, a bigger product bucket, because I can do more, which means I can actually still increase the amount of money I'm making by helping people because I have more ways to help people.
Yes. And I have been asked this actually several times too, because people, they hear about these, the non-QM products, these non-conventional products, and they start panicking. They just go to, oh, this is subprime again. It's not. You were looking at it. It's a different way to calculate income. You look at like 1099 bank statements and like an investor DSCR loans, investor cash flow loans.
Yep.
What those are doing, that's just a different way to calculate it. It's just moving the risk around, but it's still looking at them as a qualified buyer.
Right.
It's still weighing the risks. It's still looking and say, can these people afford the payment? Like a DSCR loan, for example, is a good idea because there's not many docs on those, right? And everyone's go, oh, wow, how can I get a loan like this? But it analyzes your credit. It says they have a great credit history. They own their primary residence with a clean history, meaning they're in a good financial position now. Exactly. You have assets for the down payment and for reserves. And then you get the actual 1007, the rent schedule for the investment property that you're purchasing, showing, wow, this is going to rent for more than they're paying. They're going to be even in an even better financial position.
Yes.
We have someone whose history shows they are qualified, and now they're even improving that. Why do we need to ask about their job? Why do we need to ask about all this and that?
We don't.
Exactly. This is not saying, oh, we're just going to throw out a mortgage just because.
Yeah. And let's touch on that. That's called the debt service cover ratio loan, DSCR.
Yeah.
Let's touch on that. Credit score has to be higher than on a normal conventional.
Correct. You need more reserves.
Need more reserves. A lot of them, if you don't have landlord history, you can't do them.
Correct.
If you don't have landlord history, there are a few lenders that will allow you to do them, but your credit score has to be in the 700s.
Correct.
You have to have you have to be in a primary residence, own a primary residence, have perfect payment history. You can never have had a late, ever. Like
show that you are in a great financial position with your credit.
100%.
And that this transaction will only improve that. So what can go, like it's common sense.
Yeah. And then let's look at businesses, right?
Yeah.
Businesses have a lot of depreciation write-offs, have a lot of this write-offs, have a lot of that write-offs. You do. But they have a lot of write-offs is what I was getting at.
Correct. And they have a lot of write-offs based off of what's going on that year and what they can afford. If it comes down to, you're not going to have certain expenses if it comes down to your business making it or not.
Right.
And you making it in terms of paying your mortgage. You're just not.
Mm-hmm.
So, and that's why, and actually self-employed clients right now are the leading, self-employed income is the leading cause for declines right now, because you're having so many different individuals that are now self-employed too because of COVID.
1099, gig economy.
Absolutely.
There's a major shift. There's a worker movement in this country that nobody's talking about, that they're leaving their jobs and they're going to do what they're doing, but they're doing it on 1099 and making more money.
They're doing Uber on the side, 1099 job. They're doing things like that.
Making more money.
Yes.
Figuring out a way to make more money.
Absolutely. On their own time. Well, yeah.
100%.
And guess what? They're having trouble qualifying because of write-offs. What does bank statement and 1099 loans do? Basically, it estimates, hey, you're making a 1099 in this industry. What are your expenses going to be? Let's actually estimate a reasonable expense, put that in instead of looking at all these write-offs that the government allows that people take advantage of, because there's a lot of good CPAs out there.
Very good.
Yes.
They're not doing anything illegal. They're taking advantage of tax law.
They're not. Exactly. They know how to work the system.
I don't know if you know, but taxes are unconstitutional. But anyways, keep going.
But then the bank statement loans, you actually take a look at the bank statements. You look at the money coming in for at least a full 12 or 24 months. There's a rate difference between the two. But you're looking at that and saying, wow, this business has gotten in $2 million in business deposits over the last 12 months. this guy can pay a mortgage.
Yeah. Well, let's talk a little bit about one of our clients we had. Restaurant owner. 2 restaurants,
Yes.
right?
Yeah.
What was his full doc qualification
What do you mean? You want me to give out
for income?
actual?
Give an estimate. Don't give the exact numbers. And listen, we're not saying names either.
Yeah. For the self-employed, so there were 2 jobs. So there were 2 employments. The self-employed was about $3,500.
Yep.
The other one, he worked for a family member in another restaurant
And
was paid a W-2.
and
So and that was what, 3,600?
so combined about 7,000.
Yeah.
What was the bank statement income?
Oh God, 30,000.
39,000.
Yeah, and that was after taking out 50% of expenses.
Right. 100%.
Yeah.
So there you go. There you go. So now you have a DTI that's lower. Now the interest rate on those are higher. They're about 2 points higher than a regular conventional. So we're gonna go and get qualified on a conventional if we can. But if we can't get you qualified on a conventional, we can get you qualified on that bank statement deal. Interest rate's 2 points higher, right? But Ben, guess here's the but. You want to hear it?
What?
But that gives you time to speak with your CPA about what you need to show for income and get it shown on your tax returns, right? Maybe some of those write-offs. Maybe you don't need to go buy X, Y, and Z that's a write-off next year. Maybe you take a couple less business trips.
Yeah.
Why are you laughing?
I mean, we're not telling people how to do their taxes.
We're not. We're just saying, like, if you wanted to get a lower interest rate, you have to make more money on your tax returns over a 2-year period.
Yes.
Freddie Mac, if you've been self-employed for more than 5 years, it's a 1-year period.
Yes.
What? Am I doing something wrong here?
No, you're not. But I mean, your taxes are your taxes. We're not going to tell you what to do with your taxes.
That's what I'm saying. You talk to your CPA about, hey, why am I not having enough money here? You know what I'm saying? Like, what am I doing wrong? From CPAs evaluate books and everything in a business, right?
Yes.
They can tell you where you're overspending and what.
Yes.
Based off a write-off standpoint.
On that side, yes.
I'm not telling them to do. What are you thinking? I'm telling them to cook the books or something?
I'm not. I just want to be very, very, very clear that we're not telling you that.
We're not telling you to cook the books, man. What we're telling you is to speak with a tax professional and tell them, like, hey, listen, I feel like I'm making more money. I'm not the money I need to make in order to afford a lower interest rate isn't where it needs to be. What am I doing incorrectly? And they're going to take a look and be like, okay, well, you went on 6 business trips to look at different restaurants in different areas you thought about buying, and there was $14,000 in write-offs for that.
Yes.
So, okay, let's make sure we don't do that next year, and there's an additional $14,000. Maybe that advertising budget, cut back on advertising a little bit and pay yourself. Oh, you're spending 30% of your income to the rest, your cash flow on advertising. Maybe we do 10%. There's a 20% increase right there. That's what I'm saying. Oh, how many business dinners did you meet? Meals and entertainment?
Yeah.
How many business dinners, Ben? Too many.
Yeah.
Too many business dinners. Stop going out to eat with your clients so much.
Yep.
Go do something different. Stop doing that. Or pay yourself and then do it after you pay yourself. Post-tax. You get what I'm saying?
Yeah.
Maybe the business can reimburse you. Probably not, though, because you don't want pay yourself that extra couple thousand, right? So we just found $14,000. We just found 20% because you're over advertising. That's what I mean by talk to your CPA.
Yeah.
Because they're gonna be able to look and be like, hey man, this isn't like your money's all over the place here. You're spending a ton of money on. I'll give you an example, a good example for this industry. A lot of 1099 employees in this industry, we don't have 1099. We pay in pay stub, W-2, 401k, 3% match, plus health insurance. Listen, originators, most people don't do that. But one of the things that we do, what I do the other day, what was it, Tuesday? What did I do? I met a partner of mine.
For lunch?
For lunch.
Yeah.
And I paid the lunch. It's a business write-off.
You told me he paid for you.
No, I paid for both of us. Why do you think he sent me?
He said you sold him so well that he was going to pay for your lunch.
No, I sold him so well that he gave me 2 clients.
Uh-huh.
that pays for 14 lunches.
Okay.
But that's a business write-off, right?
Yeah. Yeah.
In our industry, that's a business write-off.
Meals and entertainment.
So my suggestion is 10% of everything. If you don't own the business,
50% of it's write-off. But yeah,
you're right, Mr. Underwriter, Rain Man, baby. But what I'm saying is, 10% of everything you make as an originator should go back into marketing, wining and dining, meals and entertainment, right?
Yep.
Not 30%. So that's what the CPA can help you with, right? So if I'm a 1099 employee, I'm spending $70,000 a year on meals and entertainment. I need to cut that back and find more income.
Yes.
Right? So that's all I'm getting at, man. Yeah. Yep. 100%. Anything else on the market? Because this was supposed to be a market update. It turned out to be a pretty good conversation. I think it's a pretty good podcast. We had a lot of different ideas on it.
Yeah, we have. So I was going to go over. I did have another idea, but you know what? I think we'll
hit me. No, let's do it.
Save that for.
No, hit it.
Been going over an hour. I think
that's fine.
We could make another one. So I was going to read out some headlines
and get my thoughts on them.
Yeah,
you love my reactions. Why do you like my reactions so much? Is it because I'm very dramatic? Let's see. Maybe we can turn this into like end of every episode.
Yeah, I think that's great. This is the headlines right now are just so. Oh my god, it's so frustrating.
We'll get to them. You're like a 75-year-old man who can't work technology. How is this not up and ready to go?
It, but it's kind of a bad day to do that because everything's about the Fed, not.
Come on.
I mean, this isn't that bad. All right. Compass and Redfin lay off hundreds of workers as housing markets cool.
Wait, hold on. Compass and Redfin, weren't they supposed to overtake the mortgage industry and the real estate industry with all their technology? You mean they aren't booming and they can't keep their people employed? No way. You know who they remind me of? Another technology company out there. Apparently they're better than somebody.com. What's the name of that company?
Who?
It's a technology company in the mortgage industry that's just supposed to be so great, and you're taking out the personal touch. But they kept laying off all these people, and it was just bad headline after bad headline. They're supposed to be better than somebody.com.
Gotcha.
What's the name of the company?
You mean the one that
what's the name?
Their employees found out they got laid off by seeing the severance check in their bank account?
Oh yeah, that one.
Better.
They're supposed to be better than somebody.
Yep.
.com.
Absolutely.
Dude, listen. Who do you think the next layoffs are?
I don't know. It's been very interesting.
Do you ever wake up?
Some are laying off, some are offering buyouts, some are expanding.
I have a theory that if you put the pedal to the floor in this type of market, you can grab market share.
Yes.
I think that it's hard. It's not easy to do, but
this is the time to do it.
You have to have elephant nuts, man.
Yes.
You're just shocked at some of the things I said on this episode. Your face is just priceless.
I'm not surprised anymore.
This is an 18-plus podcast, though. I have to literally put that on YouTube.
Let's see here. Fortune.com came up with 40 overvalued housing markets that could see 15 to 20% home price declines.
Ooh, read them. That's a juicy headline. Let's hear it. It's probably California, isn't it? Has to be. Everyone's leaving. Look at the U-Haul map.
Fortune.com. Let's see. They don't even list it.
I don't think that you see a 15 to 20% housing drop because, like you said, there's no supply. Yeah. How are you going to drop 15 to 20%?
Now, I mean, you might have like
10%.
Some places in the middle of nowhere that people are moving out of but so it could be regionally based. That you might have some going down, not 20%.
You know who I think might go down 20%?
Who?
New York.
Yeah.
Upstate New York. I heard some stories up there, and no offense to my upstate New York people, that's where I'm from, about people buying homes up there and how expensive they were. And then I got a call from a friend asking, "Hey, man, how hard is it to get a $30,000 mortgage?" And I was like, "Oof, pretty hard." Do you know of anyone who does a $30,000 mortgage?
You're going to run into.
I don't even know if you can get paid on that.
The government won't let you. QM.
Yeah, there's a QM issue. It's going to have to be like hard money, right?
Probably. So that's a whole other topic.
Would you buy a house for $30,000?
So the issue with the $30,000 mortgage, the closing fees are going to take up so much of that percentage that the government's laws and APR laws are going to look at it like you're trying to gouge them. But it's not. It's just you have to pay for an appraisal. You have to pay for that, and it's going to cover up a certain amount of percentage.
Unless you pay for it as the originator.
Correct. Unless, yeah. I mean, I don't see a way to do that. I mean, I've had a lot of issues with $60,000-$70,000 mortgages. 30,000, I just don't see.
There's a rule of thumb that you really don't want to be below. If you're below 150, it's hard.
Yeah.
I mean, honestly, depending on what lender paid comp is, yeah, you just got to be careful.
I mean, our price is about to fall.
So what are the headlines? Our price is about to fall 15 to 20%. What was the first headline you read?
This one's good. Mortgage rates, home prices expected to stabilize. Washington Post. Interesting.
Dude, where'd the doom and gloom go?
I don't know.
What happened? 2 weeks ago, everything's about a recession. Oh, we're in the recession, and now we want to give people good news?
The U.S. needs more homes, but builders may be slowing construction. This is things we've been saying for weeks, and now they're finally saying it? Housing market not headed for crash. Correction in real estate likely.
Didn't we?
What?
We said that in April. Remember? So here's the deal.
All right, we need to pull up that old podcast that we cut. At least take clips of that.
We're going to throw clips up there.
Yeah.
We're going to throw save those headlines, email them to me. People, follow us on NBI Financial Group. This has been a great episode. Ben, thank you for joining me.
Absolutely.
It's been great. It looks like I'm blessing you right now. Look, I'm doing this. I don't know what I'm doing, but God's great. God's good, Ben. God bless you. Hopefully you can start getting some mortgage applications in because my back hurts from carrying it. Here's my advice to the young loan officers out there. Know your stuff. Subscribe to places like Mortgage News Daily. Look at MBS Highway. There's a bunch of different ones. Mortgage Coach. They're providing all kinds of value. I listen to these podcasts on the way to work every day. I listen to them on the way home, and I listen to them when I fall asleep because I eat, breathe, and sleep the damn mortgage industry.
Yeah.
I love it. I've loved it for a long time. We went through a little bit of a breakup period, and then I realized I missed her, and I came back. And I'm here. I'm not leaving. This is what I do. This is who I am. This is my career, and I absolutely freaking love it. I love helping people. But the way you get good, and this is my last piece of advice to every single person, and we'll end this. It's going to be quick. If you're in this industry, there's going to be a lot of people leaving this industry in 6 months.
Yes.
And
yes,
that goes for realtors. That goes for mortgage loan originators. That goes for brokerages that open. There's somebody I'm actually thinking of that I'm like, I wonder if he's going to make it. But I think he is because he set his business up the right way, and he's a purchase-first broker.
Good.
So good for him. I'm very happy. I actually helped him set his business up when I was his account executive, which for you that don't know, account executive worked on the lending side, business-to-business sales. So I would partner with mortgage brokers, and they would come to me. They would ask me questions and so on and so forth. I had to be able to structure deals for them, and I was like, why am I doing this for them when I can do it for myself and help more people, right? So anyways, long story short, my advice to these originators, do not just leave the industry. If you enjoy this industry, immerse yourself in it, and 6 months from now, you're going to be surprised at how good you become.
Yes.
And I think you probably have seen an improvement in me in the few months that we've been working together.
Yeah.
Just from a knowledge, I was pretty good before, but from a knowledge standpoint, excuse my language, Zach, beep that. But you get what I'm saying? Like, I'm not bragging. I have an underwriting background. That set me apart. But from the originating standpoint and the being able to go out in business, because it's still business to business. You better have a realtor partner that's willing to refer you business, and when they give you that loan, you make sure you get it done by contract date every time. I don't care if you have to go to the lender yourself and push it through the process. Learn the processes, learn the lenders that you're working with. If you are an originator, a loan officer that's working for a company, know your company's process, guidelines, inside and out, and then have somebody good like us that you can refer the clients that don't work with your products to. And I'm not saying that to be a wise guy. I'm saying because when you do that, you will be looked at as the expert, as the person who takes care of them. But there's going to be a lot of people exiting this market over a 6 month to a year period because they aren't going to be able to hack it in a tougher industry. And you and I have been in this for too long to exit.
Yes.
So what we're going to do is we're going to do what? Work harder.
Yeah.
We're going to talk to more people. We're going to touch more people. Not physically touch them, but touch them as a sales standpoint. We're going to go back to our database. We're going to go back to our circle of people that we know, and we're going to tell them, I will do a free mortgage review for you. I will look at your credit and see what we can do.
Yes.
You will have clients that come just like that. We're about to do a 30-day challenge. Do you know what that 30-day challenge is?
What is it?
I haven't even told you. For you that don't know, Ben and I are business partners, but he reports directly to me on the sales side, and I report directly to him on the operations side. Ben, how much operations do I do? None.
Very little.
But I sell all day, and you
Yes.
take that off of me. So the way it works when you work with us is I take the mortgage application, I pull the credit, and then you're going to hear from Ben, my business partner, who's a lot smarter on the underwriting side of things. He's going to talk to you.
Yes. So, I mean, our business model it's kind of revolutionary for brokers for two reasons. One, you've already mentioned it several times, your real estate plan, right?
Comprehensive real estate plan.
Exactly. We are working with you for life. You are a client for life. The second piece of it, too, for the actual transaction, it is going to fly through. We're going to have that pre-underwritten. We are going to have, before your pre-approval. So you're going to have as strong of a pre-approval as possible, which is pretty rare nowadays.
It's 100% rare.
Especially on the broker side.
And you're not going to fall out in process.
Exactly.
But here's the other thing. It's going to be a 4-hour turn time from 4 business hour turn time from the time you get us all the docs you need to the time you get pre-approval.
That's right.
No one else does that.
No.
Not even on the retail side. That's not happening.
Yes.
But that's happening with us, and it will continue to happen with us, and that's our guarantee.
Yes.
But finish what you were saying so I can tell these young bucks what to do for business.
But no, I was saying, like, yes, I mean, we're working, going out there, getting all making all the calls to bring the business in, but then we're going to keep them by having the structure of our business.
100%.
Right. And we're going to keep up with our clients.
Guess what they do?
They're our clients. They're not a transaction. It's not a 30-day transaction. It's a 30-year mortgage.
And it's the rules of 10, right? So
Yes.
you treat them well, and they're going to tell 10 of their friends.
Exactly.
And every single person, fun fact, every single person knows at least 100 people who own a home. Every young loan officers, young originators, young brokers, say it with me now, Ben, every single person knows at least 100 people who own a home.
I think I only know 99.
Well, then you're a loser. So what I'm getting at is this. Go out and talk to people. Make a list of all your friends that live in the states that you're licensed in and call them. Tell them what it is you do. Tell them what it is you do. You don't have to sell them. You don't have to pitch them. Tell them what it is that you do, and then say, hey, listen, I'll take a look at your credit report, and I'll give you a free mortgage analysis. You're a licensed mortgage loan originator, MLO. Some of you are brokers who own your own business. If Ben and I can talk to 400 realtors apiece every single week, Ben, if we can do that, why can't somebody who doesn't own a business, doesn't have to do the books, doesn't have to sign up with lenders, doesn't have to hire people, doesn't have to put processes in place, why can't they do 400 people a week?
Anyone can.
And if they do that, they'll be successful. But you want to know what? You want to know why I'm not afraid to tell our business model on this show? Because nobody actually follows through. Yeah. 1% of people will hear this and hear the value in this and actually follow through. Let's talk about something. I want to be the 1%, and I tell you this all the time. I want to be the 1%. I want my own support staff. I want my loan officers having their own support staff. I want to have the most top-producing loan originators in the entire country working for this company, and I want to be one of them. I love selling. I love having clients, and I love helping people. And when I say selling, it's not that sleazy salesman thing. When I say selling, I like
It's networking.
The networking piece. and being able to help people and show you the value I can provide you. I love it. I absolutely love it. But I want my competitive juices in me, and I think that your eyes are a little bit open working with me full-time on a day-to-day basis. I go, and 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 it's not about the fucking money.
Yeah.
I'm sorry to keep cussing. Zach, you really need to cut those out. Like, beep them. Put like a little something over my mouth when I say it. I want to be the best. I want to be the best. And I watched some top producers on the Mortgage Coach talk. See this person talk. I see that person talking. You want to know what I say? I'm 33 years old. A lot of these guys are in their 50s, 40s, and 50s. I'm 33 years old. We're extremely young to be at this position. And I have an underwriting background of 5+ years. I should be able to be the best in the industry, period, bar none, no questions asked. And I have a burning desire to do it. And you know this. There's been nights that I haven't seen my family because I'm out prospecting and not getting home until 11:30.
Yeah.
12 o'clock at night. And that's okay. My family understands. I'm not doing that every night. But this is my phone, right? My phone, my number rings, and I answer.
Yeah.
And then I sometimes do what? Test you, call you, and if you don't answer, I yell at you, right?
Yes.
Because what if it's a realtor? What if it's a partner? You will never hear from anybody that I was non-responsive. You'll never hear that.
Same with me.
Right. And we're going to dominate because of it. So that's a word of advice to some young people. But you have to have the it factor.
Yes. I will say, I mean, customer service should not even be a selling point. That should be the bare minimum.
But it's not the bare minimum. Most people don't do it. That's why I'm not afraid to tell our business model on here. That's why I'm not afraid to tell you how we operate. That's why I'm not afraid to give you tips on how to talk to realtors. Go to realtor.com, type in your zip code, and 5,000 realtors will pop up. Call every single one of them.
Yeah.
Call every single one of them.
Yep.
Call every single one of them, and you will be A-OK.
There's so many realtors out there.
They're all going away. Not all of them. I would say probably 40%, 30%. And you're talking to people who some of it is starting to go away. You need to find the gems. But here's the thing is there's a lot of realtors that aren't doing a lot of volume. They don't have to do a lot of volume to make a killing.
Yeah.
They make a ton of money, right?
Just doing a couple a month.
Really? Not even a couple a month. You do one a month as a realtor, you're making bank.
Yeah.
You're making at least $100,000 a year.
Yeah.
That's great money. That's higher than a median income.
Yeah.
So you're above the median income just selling one home a year. Doing our job, we're way above the median income doing 4 loans a month. Way above it. Like double, triple it. It sounds easy. It's not easy. It's a grind. I'm tired. Are you tired?
Yes.
Exhausted. You also have sleep apnea that's getting fixed. So you're a little bit more tired, right? And sorry to throw your personal information out there. I'm fat, not super fat, trying to lose weight. Also, I can be the best. And you will recognize this, and you see me do it all the time. I'm at a lunch. I'm back in the office. I'm doing things. I'm at a lunch. I'm back in the office. I'm doing things. And that lunch is with a realtor when I do leave the office, right? I'm not leaving the office unless it's to go talk to a realtor.
Yep.
And then I'm on the phones talking to at least – so I make at least 50 phone calls, sometimes 80 phone calls to 100 phone calls. I'm a slow dialer, but that's me getting after it because a lot of times I'm getting answers because the area code is that I'm calling is the same as my area code, right? So if I'm talking to 45% of those calls, I'm talking to anywhere from 25 to 40 people a day.
Yeah.
That's a lot of people. And then what do? We add them on LinkedIn. And then we follow up with an email saying it was nice talking to you. Then we add them on Facebook. Then we add them to our business pages. Then we do all of that stuff. And then we follow up with them on a weekly basis telling them what value we can provide, right?
That's right.
So if you're a young loan officer, this is what you need to do in order to make it in this industry. We are off to a hot start to the point where I started raising our interest rates a little bit and tapering today and getting cleaned up and organized in our CRM. We update our CRMs.
You have to be organized.
You have to be organized because
that goes to customer service too. You have to be able to know what's there. You can't let anything through the cracks.
Yes. So my whole speech to anybody who's watching this that's a loan officer, keep grinding, keep pushing, get a coach, and do those things. I don't know if I told you, I'm in the process of getting a mortgage coach.
I did not know that.
Yeah, dude, I want it. Like,
Yeah.
I'm hungry. Like, I want it. Not for the money standpoint. I've made a bunch of money.
So what's a mortgage coach?
It's a top producer in the industry who shows you what they did to become a top producer.
It'll kind of like mentor you.
Yeah, like a coach. Like, I have a
Gotcha.
golf coach, so I can beat you in 2 years and win $1,000.
Good luck.
I don't need it. You're exhausted from sleep apnea. You're exhausted from work. And honestly, Ben, I'm going to be in better shape than you.
We'll see. 2 years away.
Yeah. You just don't have
Plenty
the
of time
same
for that to
competitive
change.
desire as me.
I mean, you can have all the competitive desire you want.
Oh, all right. We'll see. We bet $1,000, folks. We were at a buddy's wedding. Bet $1,000 that I would beat him in golf, and I just started really playing golf like 2 years ago.
Well, yeah.
A little over 2 years ago.
We'll have to have a little special maybe on the golf course.
I love golf so much. Like, I love mortgage. I love golf, and I love my family. I love and God. I love I love golf so much. I bought a big ass house and a golf course just so I could be closer to it.
Yeah.
So here's the deal.
You've been playing a lot lately too.
No, I have not been playing at all because I like mortgage bet more than I like golf. It was easy to play for the last 2 years. You didn't have to do anything. You made a shit ton of money.
Yeah.
But yeah, you can't play right now. So here's the deal, man, is my advice to people is you got to keep grinding. You need to get a coach. You need to immerse yourself in the industry. Stop watching sports. Stop watching Netflix. Start reading books. Start reading articles. Start doing that type of thing. Start doing that.
Books are huge.
Books are huge from a selling standpoint if you've never sold before.
I think they're bigger in a lot of standpoints, in terms of personal development.
Agreed, 100%.
Not just selling, but I mean in terms of anything that you're passionate and want to learn and master. The people who wrote a lot of the books out there, I mean, just look on bestseller lists. You'll find the ones who are by people who are masters of their craft, and you see what they did to be successful, what their thought process is, because guess what? They spent a lot of time thinking on it, developing it.
It's a cheat sheet.
It is. Exactly. So learn from them, think it over, build it into your own habits, into your own lifestyle.
Let me ask you a question. Is there anything that I do that you see that you're like, wow, that's really good? And I'm going to say something about you. So go ahead.
I mean,
like that you see that you'd be like, you need to do what he's doing to a young loan officer.
I mean, the big thing is dialing.
Yeah, that doesn't bother me. Most people are like, oh, I don't want to dial. That calling people does not
correct,
bother me.
and it's always prospecting. So, I mean, we'll be out in public, we'll be wherever, and he is always prospecting. He's always giving out his business cards, not just randomly handing it out there. But he's having conversations with people, finding, like he said, find pain points and values. And
you know what I started doing? I play a game now.
What?
This is a funny game. If I'm standing in a line, say at Dunkin' Donuts in the morning,
yeah,
I say, hey, man, do you own a home? Oh, you do? Do you have a realtor? Oh, yeah. What's their name? I'm looking for a realtor. And they tell me the name. What's your name again? And I write their name down. And I call that realtor, and I say, Tony Jones told me to call you that you were his realtor. I'm a mortgage guy. This is what I do. I'm local to the area. I met him at Dunkin' Donuts. He said you were great. Is that funny?
That's great.
And then at the same time, you know what else I do? I hand him my business card, and I'm like, listen, man, we're doing free. I'm a mortgage broker. I'm a professional. I really know what I'm doing. Underwriter for 5+ years. My business partner, the Rain Man of Mortgages, Ben Singleton, ran X, Y, and Z companies, solution underwriting. Solution underwriter for 10 years, whatever, right? Whatever I say about you. Hand him my business card and say, I'm doing free mortgage valuations. Give me a call. I'll make sure you're in the best possible deal you can be in. And by the way, ignore the news. They don't know what they're talking about. I've gotten 4 applications this week off of that.
Yeah.
Seriously. Is that not wild? Like,
Yeah.
it's that easy. Every young originator, if you don't have more business on your mind at all times, there's a problem. I brought my son to swim lessons and handed his swim coach. My son's 2. handed his swim coach a business card and said, I'll do the mortgage. She said, I'm 16. I said, you're going to need one in 2 years. Do not rent. It's a waste of money. But you get what I'm saying? Like, that's what you have to be like. What I would tell people about you, one of the things that you really apply well to this mortgage industry and why you're newer. I've been in sales, right? You haven't. You're that underwriter and you're doing a lot of operation side of things. When you are focused and when you are looking through a file, you're like a mechanic who's finely tuning a car. You know everything you need to do to make it perfect.
Yeah.
You know the process. You know what processes should look like. You created all our processes.
Yeah. Well, and all of that is just based off of knowing how lenders work and what lenders are going to look for, and knowing.
But you're very meticulous about it.
Yeah.
That's good.
You have to be.
So young loan originators need to be very meticulous because they're not going to have a support staff, right?
Yeah.
They're doing what you're doing, and they need to be able to do that. When I was first getting into the sales side of things, the origination side of things, the first thing I did, and I was a top producer, everywhere I've been, the first thing I did, you know what it was?
What?
I learned the system inside and out.
Yeah.
The second thing I did, I prospected. I called 100 people a day, just like we're doing right now. And at the same time, I learned the system inside and out. What did I do today?
Organized.
Organized into what? That training, remember? You know what it was? Jungo.
For the CRM.
For the CRM. So I know our system inside and out. When I saw this Flowify email, the first thing I asked you is, how do I work it?
Yeah.
How do I get documents there? We're still learning, but we're going to learn. And we have another training coming up Friday.
Yep.
But what I'm getting at is be meticulous. But all right, listen, we got to go. I think we're running out of time on the camera. Hey, folks, it was great. Follow us, NBI Financial Group LLC on LinkedIn, Facebook, Twitter, Instagram. Twitter's, I think, NBI Fine GRP because you only have a certain amount of letters. So
interesting.
Yeah. Elon, change that. All right, folks, we're out. It was a great episode. Ben, thanks for joining us. Peace. We're the loan guys.
Peace out.